better. But again, the first rates on your screens this Monday morning. Let's start off with ONGC, the big one, and what it's currently up to in trade. So that stock will just come off you on your screens first. And then, of course, Hero MotoCorp as well. ONGC, though, starts off lower in trade. I guess those rates will actually pick up from there. Hero MotoCorp down 2%, even though there's been a margin expansion and the EBITDA has come in higher by 47%. But the tilt of the market clearly is flat, inching lower as we speak right now. There's DRL, there's Aurobindo Pharma. Both those stocks should come up for you on your screens, not just news from the US FDA, but also earnings. 2.5% higher for DRL. Oro will just come up for you on your screens next. 3% higher for Oro Pharma as we speak right now. There's Honasa Consumer as well. The pre-open rate itself was indicating a gap up start for this one. So let's see what that stock is up to in trade, because it should be a decent move for Honasa as we speak right now in a trade. Honasa has started off with a 7% gap up, no less. So that's a decent start coming in for Honasa on the back of its earnings. A lot of other names which are in focus as well. There's Inox Wind. There's been an earnings beat driven by better execution of their wind turbine generators. Everest Canto cylinders, wherein the domestic and international sales remain robust. There's DOMS as well. The Q3 PAT has jumped up about almost 43%. MCX, wherein the company is saying that they've already shortlisted the names of candidates for the post of MD and CEO to SEBI now. So that's going to be the other one, although the numbers have not been all that impressive. Sri Renuka Sugars, the board has approved raising about 250 crore rupees via QIP. So that's another stock which is going to be in focus. And then, of course, this Paytm continues to be in news. They've set up a committee to strengthen the compliance and regulatory matters over the weekend. 1% higher barely is where Paytm is right now. And then Landmark Cars, I want to see what this one is up to, because ever since its listing, it has had a very, very smooth ride, but the numbers are not looking all that impressive. It's a 7% downtick that you're seeing on Landmark Cars to start off with. Alisha, anything that you're spotting?
Yeah, I'm excited about the IT sector because that one is the top gainer right now, at least at the sector level. So Wipro, HCL Tech, Infosys, Tech Mahindra, they're all starting on the front foot. No major news flow as such over the weekend, but there were reports that, Wipro might be laying off some people in order to maintain their margins. So let's see whether there's any truth in that story or not. Pharma stocks led by Aurobindo Pharma, Dr. Reddy, Divi's Labs are fairly excited. While energy stocks are coming under pressure, real estate, PSU banks, they're all in the red right now. So market clearly giving up those opening gains that we have seen. But Naresh, let me first come to you for the opening trades. Tell us, what do you spot on the index and what are the first trades?
So the index continues to remain sideways. The trade I would be looking at is Tata Communications. That's a stock which is getting closer to a breakout. So expecting that to break out over 1760, 1780 levels in the short term.
It's looking good for a trade.
So Bank of Baroda is something which looks attractive. The stock had done reasonably well over the last 2-3 days of price recovery. That's a stock which I would continue to hold on.
All right, there you have it. Those are your first trades from our chartists. Let's connect with Devina Mehra as well, who's joining in on the show, Chairperson and Chief Investment Strategist at First Global. Devina, morning. Great to have you on board as always. Let's start off by just getting a view as to how you believe India is currently positioned, given the fact that we have really been moving from strength to strength and, mind you, without support from the foreign institutional investors. What's the road ahead looking like with big events like the elections lined up?
Good morning. I'm not, as I've said often on your show, I am not one to track FII flows, and therefore I never had any belief that FII flows are what determine the markets, even when the mutual funds were not that big in India or almost did not exist. So that apart, my view has actually not changed, I think, from the last time I was on your channel, which was to say that we don't see any risk of a big crash. I don't see that. Mainly because there was a whole decade where we underperformed from 2000 to 2020, both in global terms as well as relative to our own history. So you compounded only 8.8% in that decade instead of that 15-16% we expect. And even this decade, it's not been that it's been a great one, mainly because of all the pandemic and all those related news. So the point being, we are not above the trend line. So the risk of a crash comes when you're far above the trend line. And this I'm talking the large cap mainstream indices. So that that risk is low. Of course, there might be for some weeks sideways move or correction and that sort of thing. So at the moment, actually, our portfolios are hedged partly because we just to be on the safe side. But we are not in cash because if you're in cash, you miss out on the up move. So we don't want to take that risk because the probability is still high that you would have a good year. In our global portfolios, we are overweight India. So clearly, a view on India is positive. Where you need to be, more careful is things like small caps, micro caps, IPOs, basically the high end, high risk end of the market, and also within the mainstream industries. Also choose carefully. For example, banking is a sector we don't currently like, and so on. So you have to choose the companies and sectors. But otherwise, I don't see on a longer term basis any great risk. Elections, obviously, I mean, the probabilities are only one way. But I would also like to say that, that often we play it up in our minds much more, like 2004, exactly. 20 years ago, there was a big upset. Everybody expected NDA to come back, and instead, the UPA, as it became later, came in, and the market crashed on the day. But then, within a few weeks, it was forgotten, and that year was one of the better years in the history of the Sensex. So that's how it goes. So, I mean, I don't think, that's ultimately the big determinant.
Absolutely. Devina, hi, morning. You just alluded to banks. Curious to know what's leading to this underperformance.
Well, I mean, banks, if you look at last 4 years, we're just about finishing 4 years of our PMS. So we started in February 2020. And if you look at 2020, 21, 22, 23, actually banks have underperformed in 3 of those 4 years. Only in 2022 they outperformed, and that coincidentally or otherwise was the only 1 year where we were market weight to overweight banks. So if you look at 2020, that was the only major sector in the negative. In 2021, the market went up 22%, Bank Nifty went up only 11. 2022 was the only year, as I said, where it's outperformed. 2023, we are again back to going up only half as much as the market. So that, the outperformance by banks is actually the news when it happens, because it happens far more rarely. And I
Seem to have a bit of an audio issue with Devina at this point of time. We'll try and reconnect the line because for now, in terms of the market, it's Honasa Consumers that deserves mention for that 9% up move. Cement was having a great run at the end of the day on Friday. We had seen names like, India Cement, Shree Cement of the world perk up, and that move is continuing today, at least with the likes of Star Cement, etc. Indigo Paints is already holding up in the green. Godfrey Phillips is the other one which has decent amount of volumes to back it up, and JK Lakshmi Cement as well. Devina, sorry we missed you there at the end of your point. Would you want to complete that?
Yes, so I was saying in banks, out of 3 out of 4 years, they've underperformed. And 2022 was a particular sweet spot because you had the NPA cycle behind you, credit was growing well. And when interest rates are going up, bank margins go up, at least at the first round. So that was a particular sweet spot. Again, now you're seeing, going just by what RBI itself is saying, that there are risks on the credit side. And that's really my issue with banks normally, that negative surprises come in much more often than positive surprises. And sitting outside, there is no way you can assess what the credit quality of a bank is. So you have to be super careful. Well, we are quite underweight banks, and within that, we are skewed more towards the PSUs than the private sector. So that's broadly what we have right now.
Yeah, Devina, just one last question. You said the trend line is one thing that you're watching closely. What is above trend line and has completely left the trend line out of the park right now is all the PSUs, whether it's power financiers, whether it's bank, railways, defense. They don't care what the trend line was. What do you do with those stocks?
So be careful, but on the other hand, also remember that the PSU index crossed its 2008 high only in 2023. So all the people who were talking about PSUs for years on end, it took 15 long years to come back. So the cycle always changes in a market, that something that goes up comes down. I mean, we say it's a giant wheel, so you have to see what moves next. So just because it has moved a lot in the last few months doesn't necessarily mean that it is dangerous, but you have to look at each individual stock and what the moving parts are and what the expectations are. So now you cannot just buy as a pack.
Appreciate your time, Devina. Thanks so much for highlighting your views on the market. All right, let's shift gears then. And it's been a flat set of margins when it comes to Thermax, but let's talk a little bit more about the results as well as their additional capex plans with Ashish Bhandari, who's the MD and CEO, joining us right now. Thanks so much for taking time out and being with us on ET Now. Let's start with numbers because your top line growth has been pretty steady, but margins were a bit flat. Just taking a look at your segmental performance, when, according to you, will we see margin recovery?
Hi, a very, very good morning to you and to all your viewers, Aisha. Our margins, if you take a longer look and not just a quarter by quarter look, have been improving for now a couple of years. Yeah, and the steady improvement that we have been seeing is something that you can expect in the future as well. Given a portion of our business is driven by projects, looking at just one quarter sometimes may not give a clearer picture. So I would request if we could take a slightly longer view, that balances things out. Of the three big parts that we have within Thermax, you will see the products and chemicals. Both of these, we are continuously growing profitability and growing it well. Projects is where we have up and down. The fourth part of our business, which is green solutions, it's a renewables platform. That is in an investment phase and will continue to have losses for another year. And we expect it to start breaking even and starting showing good profitability the year after.
Sure. All we wanted to understand, Ashish, was whether there's a trend in place here or not. So you did say that industrial infra is going to actually go up. Do you have visibility on when the margin recovery would take place there in this particular segment?
So industrial infra is not a specific period. It is more a project by project profitability. And I've been saying this for some time, that we have a pool of projects and some of our older projects have had perhaps lower profitability than we like. And those get cleared up on a periodic basis. And what we are bringing in, we are being very, very careful that we look to bring things that are strategic, that are potentially more profitable, or even if they are in a sector like bio-CNG, where we may start with a little bit of an initial tougher ride, they are in a sector where long-term we see consistent profitability. Yeah? So more and more the push is to get into areas that are more driven by energy transition, more driven by long-term sectoral shifts, and not look at project by project kind of work, which historically sometimes has given us lesser profitability than we would like.
Ashish, just to take a leaf from that conversation, over the last 5 years or a decade, you have been working a lot harder in terms of diversifying your portfolio, because earlier, of course, it was largely dependent on the power sector and the thermal power plants, etc. It's now, of course, chemicals and other products as well. But now recently, the commentary coming in from the Power Ministry suggests that there's going to be a large uptick in the thermal capex as well, whether it's the Talabira plant that we have seen from NLC and the other plants that even a lot of other entities are planning. Do you think it's time to refocus and reprioritize your portfolio to focus again on those mainstay power and thermal capex?
See, Thermax, and we've been saying this now for 3 years. Yeah, think of us as a company for energy transition, and for a country like India, one that can bridge energy sustainability with energy availability. We are very, very clear that that coal has a big role to play in India's growth story, because something that provides 60% of India's current energy basket is not something you can take out entirely. So Thermax's push has been to make coal cleaner, make coal be less relevant to the CO2 footprint that it produces. So in that sense, we are working on coal gasification, carbon capture, a variety of different technologies. And as the government looks at putting up large-scale supercritical power plants again, whatever role Thermax has, we will look at it very, very carefully as well.
That's quite interesting. So tell me, a year, 2 years down the line, what's going to be your, say, revenue mix? What's the pie going to be like? What segment is going to be contributing maximum to your revenues?
Look, I think where India is in a moment and where the world is in a moment, there's no shortage of interesting things to do. And specifically for us as a company, the focus is not on what the revenue mix would be and what the focus is on what actions we can take and where do we want to go out and invest. And there we see tremendous areas consistently. So if I may just take a step back and talk about what are the major trends that we are working across. First is just adding a lot more capabilities that are relating to energy transition and related technologies. So you will see things like bio-CNG, biomass, starting to do build, own, operate, hydrogen, variety of different capabilities we are looking to add to our product mix. Second is just the growth that India is seeing and the urbanization, which means capabilities around water, construction chemicals, cooling technologies, variety of these India would need. And so we are investing out there. The investment that we did and the small acquisition that we did was also in this regard, because India will need a lot more solutions around ultra pure water, not just in pharmaceuticals, in F&B, in semiconductors, variety of different industries. So we are looking to add a host of capabilities, and you will see similar themes in our chemicals business, in our cooling business also emerge. Lastly, I would say a big part of our future will also be driven by project capability around biofuels and the like, and we are looking to bring a lot of new capability in the entire biofuel sector. Fourth would be renewables and having good capability to be able to provide solar, wind, storage, hydrogen, all of these capabilities on a turnkey basis. So a lot of new things going on, and I expect all four of these engines to continue to fire for the next several years, not just for the next quarter or a few quarters.
So clearly being future ready. Ashish, on that note, we let you go. Thanks so much for making time. But from one management to another, and this one is the management of Bandhan Bank. Mr. Chandrasekhar Ghosh, the MD and CEO at the bank, is joining us on his numbers. Hi, Mr. Ghosh. Good to be speaking with you. Well, the credit cost this quarter has remained quite stable. But if I recollect right, you were targeting a credit cost that will be in the range of 2% plus minus maybe 20 basis point. Do you still hold on to that target?
We see that we are guided to the credit cost 2% plus 20 basis point or minus. So in that sense, it will be come to highest in the 2.2 or 1.8. So in that sense, if you see that the stable credit cost has come 2.5, and fourth quarter, it is a very good quarter, always is happened on that, the growth and quality of the portfolio. I have that the confidence on that, the quality of the portfolio is a credit cost. It will be that line. We will be trying to reach on that.
All right. Morning, I also wanted to understand what the outlook is when it comes to slippages for the quarter. We did see a spike in slippages due to the migration, the system migration. So what's the outlook?
If we see that whatever the slippage happened in the 1390 crores, out of that 45% of this slippage happened in the October month, which was in that the two causes we mentioned about it. One is a very biggest transformation happened in the bank, which is the CBS and other applications. That is, and second is the long holiday because of the puja. But when I come to this, the balance 55% are coming to the November and December, which is the average is coming 380 crores per month, and which have been shown that because of this, the November and December is drastically has come down of the slippage, and again the January has also showing the better than the December, and of course it will be helped on that coming to the next couple of months. It will be come to the line of that the lower than the last quarter.
Right. Let's also talk about your NIMs because they've remained healthy at 7.25% this quarter too. Are you seeing any tailwinds for NIMs going forward as well?
If you see that in the now, there is a situation is in very high liquidity situation, no, very tight liquidity situation, and this is the tight liquidity situation. Cost of fund has increased in across the all banks, and that is an impacted to the NIM. So we after that also, if you see our NIM is a 7.2%. We are continued the last 2 quarters. So we feel that the as per our guidance, this financial year 7 to 7.5% will be like to see that we can be managed in that. But what will be happen for next year or onwards on that, we have the strategic plan in the February, March, and we can be explain all the matters and the rationalize on that, how much it will be like to come the future, we will be like to get back on that.
Okay, Mr. Ghosh, on that note, we let you go. Appreciate you joining us. But let's welcome on board Mr. Bharat Madan, the whole-time director and CFO at Scotts Kubota as well. Mr. Madan, hi, good to be speaking with you. Well, on Friday, your stock took quite a bit of knock, and that's because the street was worried about the decline that they're expecting in Q4, because parts of the street is expecting a double-digit kind of decline in your volumes. Is that something which could be realistic?
Well, what we talked about, I think, is the industry decline. Because if you see the months of January, we saw 15% decline happened in the industry numbers, even though our decline was much lower at about 7%. And the reason being the industry in the south and west, which is actually declined quite a bit due to the irregular rainfall. So you see the major deficit happening there. In the industry, degrowth is more than 50%. So fortunately, unfortunately, our presence in that market is not very strong. That's why our decline was much lower. So when we talked about the guidance, I think we talked about the industry guidance for the quarter, which we expect will be maybe double-digit degrowth may happen. But doesn't mean the Scots will degrowth, because we are more focused on north and center, where the degrowth levels are much lower. So in our case, maybe the degrowth will be much lower. But yes, industry, we expect that degrowth may be there temporarily.
Put a number to that? What is it that we can expect, in particular when it comes to your volume growth as a broad range?
So if you look at our YTD numbers for the first 10 months, I think we had degrown roughly about 5%. And we expect the similar number will be there. So it will be mid-single digit degrowth this year. And now as you enter into the new year, obviously it depends on the guidance which we get initially for the monsoon. And if the monsoon is likely to be good, which is the indication we are getting now, then you'll see maybe growth will come in, in the industry, especially in the second half next year. But obviously, we're keeping our fingers crossed. So let's see how the guidance comes, for the monsoon.
So, Madan, at least in the first half of next year, the decline will continue, right? And recovery, if at all, will only happen in the second half of the year. Do we have that right?
It will all depend on how the Rabi output will be, because the Rabi season was slightly delayed this time because of the delayed rainfall. So the sowing also got delayed. So let's see how the output happens there. So if the harvest season goes well, then we'll see probably a good demand coming in first quarter also. But having said that, since it's also going to be probably an election period, so there may be some slowdown in dispatches, which is likely. But maybe then it'll get made up, by the month of June. So I think we'll have to see, wait and watch. So it's very difficult to judge right now how the next quarter is going to be. But luckily, this time the festival season has shifted from March to April, which is another reason for why the Q4 may slightly degrow. But then Q1 probably will do better. So let's hope. I think we're expecting Q1 should actually recover, compared to Q4.
Now, along with domestic, Mr. Madan, the international market has been facing some headwinds. So what's the outlook in terms of a timeline, perhaps how many quarters you would look at before you can see recovery?
So for our overseas market, this year, obviously volumes are degrown roughly 30%, and that's the industry degrowth also. Would we expect the recovery probably will start happening from next year, especially the second quarter onwards, There are certain products which are developing, which are in the process right now, and we expect the products will get introduced and launched, by second quarter next year. So we'll see maybe good recovery happening on export volume for next year, next fiscal. We expect in 20-25% growth in export volume for next year in FY25.
But tell me, what about the other segments of your business, construction equipment, your railway order book? Have they managed to actually sort of cover up for the slowdown in tractors?
That's right. I think if you look at the last year, the infra story has been very strong. So we've seen that growth coming in both construction equipment segment as well as in the railway equipment segment. Construction business has grown more than 50% now in the first 10 months, and that momentum is on. And this is the peak of the season, so we expect February month will also be strong months. And railway business also has seen very good growth. In the first 9 months, we've seen almost 22% growth in the railway top line too. And the order book continues to be strong of more than 900 crores. So these two segments are continuing to outperform. And we expect the next year also will be a lot of focus from the government on the infrastructure is going to be there, looking at the capex plan, what government has really outlined in the budget, which is showing an increase. So these two sectors will obviously, contribute significantly now, both in terms of top line as well as bottom line, to this first column.
Mr. Madan, despite the kind of headwinds that we have seen in terms of volumes, you managed to maintain your margins. That's partly, of course, on account of the raw material deflation that we saw in the quarter gone by. What's the outlook for Q4? Do you think this 13.5-14% kind of number be sustainable?
Yeah, we hope the number will be sustained. I think it will be in that range only. So I think we have been in the 13 to 13.5% range on the margin front at a company level. And we expect that number will get maintained in Q4 too. So in spite of all the headwinds we're facing, because it's not only the commodity prices. I think if you look at the price increases which have been passed on to the market and also other costs, which have been kept under check by the management this year. So there we've done a good job. So we expect, I think, the margin, guidance which has been there in the range of 13-13.5% will continue to be maintained. And then it will only improve going forward, I think, as you enter the next year in FY25.
And what's the outlook on your NBFC arm? When do you expect to start that? What's the plan with respect to that?
So we got the company incorporated. So in the process of now filing application to RBI for this license. So, but we expect, I think it takes about 4 to 6 months time minimum, before you get an NBFC license. But we hope in FY25 we'll start the operation in that company too.
All right. Thank you for giving us a deeper insight as to how the business is shaping up as well as the outlook. So recovery from Q2 of FY25 and 20 to 25% export growth is what is seen for FY25. That's Escorts Kubota for you. Moving right on then, let's put the spotlight on the power space. Before we get to the management of Tata Power, let's hear it out then from none other than the Power Minister himself, R.K. Singh, speaking with Ajay Sharma at the Global Business Summit, talking about how the power sector's priority continues to remain on focused capacity addition.
I have 27,000 megawatts of thermal under construction. I have about 12,000 megawatts which have been bid out. I have another about 19,000 megawatts which are under various stages of clearances. By 2030, I will have added 90 gigawatts. Now, in renewable, I have 130,000 megawatts under construction. 130,000 megawatts under construction. I have about 71,000 megawatts under bid. I already have a renewable energy capacity of 181,000 megawatts. I have 130 megawatts is under construction.
Okay, let's take a leaf from that and let's welcome on board Dr. Praveer Sinha, CEO and MD at Tata Power, joining us on the show right now. Dr. Sinha, great to have you once again on ET Now. Mr. R.K. Singh over the weekend told us that power is the game in town. I'm sure you would concur with that.
Yeah, I think so. I think the way the demand has been growing up, there is a huge surge and we expect that to meet the demand, a lot of capacity addition will happen in the next few years.
Okay, capacity addition will have to happen if you have to meet that growing demand. But I wanted to come back to the earnings this quarter, Mr. Sinha. And Mundra plant reverted to losses this time despite Section 11 at play. What explains that? And do you expect these losses to continue in Q4, Q1 as well?
Well, these losses are primarily because of the other aspects relating to depreciation and also in terms of Ind AS 115. So in terms of operating profit, Mundra has made operating profit. In terms of EBITDA, it is made profit. But because of these aspects about the depreciation and also because of the Ind AS requirement, you have seen the losses, which is a nominal loss.
Okay, fair enough. Let's also talk about coal prices, which have fallen 81%, understandably. But what is the outlook on coal prices? If you can share any insights, any update on plans to monetize the coal mine portfolio?
So our coal mines have been doing very well. They continue to perform at a very high capacity. Of course, the prices have now stabilized. It's come to a level of around $120 for 6,500 kcal coal. And now we expect that this is an area where not much of a hike will take place in the coming quarter because there is a good demand supply match that has been seen. And we expect that whatever profit that we have seen in the coal mines in last 1 year, that will virtually stabilize going forward.
What we want to understand is that you'd cut your FY27 PAT guidance, right? A, why is that? And then what are the revised targets? Because it seems like it was a sizable cut.
I don't think we have cut our guidance for FY27. We still believe that this is a guidance that we will very much achieve. And if you see now, 3 years back, we had a profitability of only 1,400 crores. Leave aside the exceptional items. This year, in 3 quarters itself, we are 3,000 crores. So I think our profitability has increased by nearly 3.5 times in last 3 years. And we expect that this profitability will also double from the guidance that we had given in 23 to double that number. And we are on track to achieve that. And you have seen that how our profitability has now stabilized. And this quarter, the satisfying thing is that our profitability has come from core businesses, unlike last year where a lot of it came from the coal business, which was a one time. And going forward, you will see all our businesses, that is transmission, distribution, generation, will continue to contribute. In fact, this quarter, 71% of our profit has come from our transmission, distribution, and renewable business. So I think we are doing very good in terms of consolidating and ensuring that our core businesses start giving us the profitability, and thereby it can be sustained in the long run.
Okay, point taken. The reason we asked you that question is because in your earlier presentation, you had talked about how from FY22 levels, where the profitability was 2,300 odd crores, you were planning to make it 4x, which comes to around 8 to 9,000 crores versus the latest presentation where the profitability is 3,810 and you're expecting it to be 2x. So a little lower than what it was in the earlier presentation, but I think it's a small number at that. But I wanted to come back to the focus on the international businesses as well, because there was this maiden dividend from Zambian unit that came this time, and that supported the profits as well. Do you expect this kind of contribution to continue, and is this a fundamental asset for you that you would want to hold on, or are you looking at probably divesting a stake in some of these international assets?
So as you were aware that the Indonesian asset was not performing well, and because of the challenges in the asset, we had taken it up with the government. So all our old payments, which is due to us, which is nearly $150 million, 50 million has been received, and the balance 100 we'll get in next 12 to 18 months. Otherwise, this asset has been doing very well because of the challenges in Zambia. We could not get the payment from the buyer of the power, and also because the currency issues were there. Now that that has been sorted out, the plant is operating very well, and we will expect dividend flow from the operating plant as well as the old payments which are due to us, which we will receive in next 12 to 18 months.
But since you talked about the Zambian unit, do you actually see a sustained contribution coming in from there?
Sure. In the operating plant, we will get the sustained returns. Apart from the old outstanding payments, which will get paid in tranches over the next 12 to 18 months.
Okay, so that was about the Zambian unit, but I also wanted to shift focus and talk about your solar, the captive solar module factory that you were going to commission very soon. I think part of it has already started, but the actual production is expected to start from Q2 of this calendar year, right? Could you talk to me about what kind of production are you envisaging, and will it be 100% captive only? Because the prices in the external market has plummeted quite a bit.
So there are two parts of it. One is the manufacturing of plant. The module plant of 4 gigawatt, out of which 3 has already been commissioned and the production has already started last week. And it is now getting stabilized. So we will definitely start seeing some returns in this quarter from the module manufacturing plant. The cell plant will get ready by first quarter of next financial year, and it will stabilize by the second quarter. So the cell plant output we will start getting from the next financial year. But the module plant is already operating, and we will be supplying to our existing projects, whether they are group captive projects or those are utility scale projects, or even for that matter for our rooftop business. So I think we are doing very good on the manufacturing facility, and this is one of the fastest which has come within the country. The second aspect is the low cost of imported modules. As you are aware that the ALMM is only applicable till 31st March, and import beyond that will not be allowed for utility scale projects and some of the other projects. So I think we have very good opportunity to supply to the domestic users as well as to large projects which have the requirement of a domestic component. So the financials of the manufacturing plants are very well structured, and we do expect that we'll make good returns on this investment.
And given that Tata Power has signed an MOU with the Maharashtra government for the brownfield development of 2.8 gigawatts pumped hydro storage, can you tell us the company's strategy for battery storage?
So the pump storage project, both the 1,000 megawatt at Bhivpuri and the 1,800 at Shirota, they are on track. We need to get various approvals, including the forest and the environment and the various other approvals from CA and Central Water Commission. Those processes are on. We expect at least one of the projects, the 1,000 megawatt Bhivpuri, to start the construction activity sometime in later part of this year, targeting by third quarter of the next financial year, the construction work will start. And we are expecting that, considering that we already have one reservoir and land is available with us, we'll be able to do it within 3 years or a little more than 3 years. So we'll be on ground setting up this plant, and we will start seeing the results of it from next 3 years and 3.5 years onwards.
Sure. A couple of last questions, sir, before I let you go. On the net debt front, it had come below the mark of 40,000, but given the kind of capex you've lined up, what's the number that we should expect going forward on the net debt? And secondly, with respect to the EV infrastructure, the government is also planning to electrify the highways as well. Would you be a strong contender for that, making the highways into e-ways?
Absolutely. First of all, on the EVs, we are the biggest player. We already have EVs installed at various locations right through the country, and we have nearly 55% market share. And when you drive intercity, whether it is from Srinagar to Jammu or Jammu to Delhi, you would find our EV chargers. Similarly, between all major cities, we have EV chargers. So we'll play a very, very important role based on the government rollout plan. Secondly, all our businesses you would see will start giving very good results, having seen the type of investments that we have made in last few quarters and whatever is planned in the next few quarters. Our financial metrics, whether it is the debt equity or it is the debt EBITDA, will also be within the prudential norms. Today we are at debt equity of just 1. And even with the high investments that we are planning, we will not be crossing the 1.5. Plus the internal accruals that will come from our existing operations will also support us in ensuring that our financial metrics are met. So I think we are in very good situation considering infrastructure company, and many of our investments also will start generating revenue in the coming years.
Sinha, I presume that you drive a Tata Motors car charged by Tata Power?
Absolutely. It's such a pleasure and an honor to do that.
Okay.
Yeah, and Mr. Sinha, before I let you go, I think the street was a bit disappointed about the pace of capacity addition that we have seen in the renewables business. Are you expecting a pickup soon? Was it just a momentary delay, or there has been some shifting of plans because of which your renewable portfolio hasn't jumped up to the level that you had earlier envisaged?
So we'll surprise you with what we will do in this quarter, in the Q4, where we have nearly 1.2 gigawatt of projects lined up for completion, and also in the subsequent quarters in Q1 and Q2 of FY25. As you are aware, there was a huge increase in prices in imported modules last year, and that is why we had deferred some of the projects, which I think on hindsight it was the right decision, considering that the prices have come down in last 6 months. And we will take the benefit and implement most of the projects in next 2 to 3 quarters.
Forward to that, Mr. Sinha. Always good speaking with you. Thank you so much for taking the time out.
Thank you. Thank you very much.